Hi, this is Jay Norris, author of Mastering the Currency Market. Welcome to the report. Before we get to the charts, I need to point out that trading futures and Forex is a risky endeavor and not suitable for all investors. The charts we're looking at are real-time market snapshots and may not be replicated going forward. First market we're looking at is the Australian US dollar. Aussie USD continues to stay in that pennant. You started backtracking towards the middle of the pennant, so you retraced about half of that big benchmark candle from Friday when the Bank of Japan stepped up and held the line for the yen. I think the very fact that you did not see dollar strength that day, that you did not see a flight to quality, calmed the whole currency complex down. It was pretty positive for the majors. However, the Australian dollar did back down a little bit, and you're still in that big pennant. Euro US dollar had a big day on the upside. You had a follow through, really validates what we say so much about trading in the direction of the higher time frame trends. You can see on this chart the white line represents the weekly trend of prices above the white line, the weekly's higher. Yellow line, the daily trend, prices above the yellow line, the short-term trend is higher. So direction holds. The weekly trend holds here overall, and it looks like you're in a position now to potentially challenge the November highs, to challenge this big confluence of resistance up here at 42.80 or so. Well, they've got to get above 40 even to begin with. But today was a 4-month high settlement for the Euro US dollar. So big day up in the Euro. I guess if you like the yen, you love the Euro. Next market, the pound dollar. Pound US dollar. You had an update there too. You reversed losses. I think what happened here, this is a great case of the weekly trend holding. A lot of traders said, well, no, the weekly was bending. The weekly bent, but it did not break. I will show you right here. There it is. There's your weekly. And if you draw your standard 2-point trend lines, you be honest and objective about things like simple things like trend lines. You learn a lot in trading. You go a long way in trading on that. Look at that. Based on that trend line right there, look at prices held. So if anything, the trend held overall. So the weekly trend held, and there's the chart of it, and you can see why, again, advantage higher time frames. And I think, again, overall, the Bank of Japan moving to backstop their own financial markets, backstopping their currency like that, lent an air of calmness to all the majors, which the European currencies benefited from. Also, you have to start to think, well, wow, the banking problems in Europe look swimmingly well now compared to the problems in Asia. And if the Japanese yen held the line, that is the powers that can be there, were able to hold the line there. You start to not wonder why the euro's been so strong, and not wonder why at all that the euro is able to rally also. Because governments are going to do what they have to do to keep stable markets, and that's to everyone's benefit. You know, and as I was saying over the weekend, if you ever looking at markets and you're thinking about shaking your head like, you know, what happened there, remember this: nobody really cares about speculators. And for the most part, that's what traders are. So it's very important to stay objective about these things and just go with where the market wants to take you. Don't ever get in a position where you're arguing with the market. Next market, the dollar CAD. Dollar CAD had, well, they're still leaning on that market. Certainly the weekly down. The monthly's down. The weekly's down. Looks like that daily did reverse last Friday there. Let me put I don't see the lines on there. My apologies. There we go. You can see the daily direction is up. However, the monthly, weekly are down. I still think 95 even. 95 even on the downside in dollar CAD. Next market will be the chief. And the fact that you did not have rampant dollar strength off of the horrible news about the earthquake, the fact that you did not have a flight to quality was really beneficial for all the currencies across the board. particularly the European ones. So the chief actually strengthened now today, and overall it looks like you're going to test that 92, the figure, again. Long term, I know I sound like a broken record. I think you're in the middle of putting a long-term rounded bottom here. However, that can take a long time. It can be very drawn out. Perhaps time-wise, we're close to that bottom, even price-wise, but it may take a while. I wouldn't mind playing the Swissy short side intraday. I would not want to take positions at these levels, though. Just too cheap. Long-term, you don't have the most favorable demographics for the Swissy versus the U.S. dollar. Next market, the yen itself. This is where all the talk has been. Certainly our thoughts and our prayers go out to everyone affected by that just terrible, terrible tragedy over there. And you can see some volatility came in the market, but the market strengthened overall. I suppose we can show you, maybe it's easier to show you the future chart, yen futures, where you can see how it strengthened there. 6J pound, space pound F is the symbol for E signal. And this will probably give you, yeah, there you go. So you can actually see the market strengthening. Let me go with a weekly chart. And they're trying to throw a buy signal at me there. There you go. I took away the daily line. So you could see any other time you would have thought with such a terrible tragedy, the yen would have come down, earthquake in Tokyo, the problems with the nuclear power plants and everything, but the yen is staying firm on orders from the Ministry of Finance and the Bank of Japan. They're trying to seal off, well, essentially just protect their asset class markets, their investment class markets, and those of any other foreigners, along with the locals with their money there. And that's a pretty smart thing to do. It's bad enough, the physical situation over there. And as they try to get through this, the last thing they need to worry about is a financial crisis also. And, it's like this, when a stock market collapses, it's not like someone makes the other side of that money, like it is in a commodity market, how it does. Commodity markets is a zero-sum game. Stocks aren't. Asset class markets aren't. When that money's gone, the money's gone. So it definitely is in the Bank of Japan's best interest and all the central bankers' interest in hard times like that. When you have a crisis out of the blue like that, you support your markets, and then that money doesn't disappear. Very, very important that that you understand that concept. Then you'll understand why they do it. Okay, so you can see the yen holding up. Yen futures chart here. We'll go back to the dollar yen. I think you've got a test of 80 in the cards here, and that may be a level where we'll take some real interest in this market. Potential long-term double bottom at the 80 level, so we'll be watching that. Hey, let's take a look at the U.S. stock market, and then we'll wrap it up. S&P 500. Stock indices, there's no doubt about it. You can't save everything at the same time. I think there's no doubt about it, though, that the Bank of Japan's actions did. It would have been a lot worse, even around the globe, for stock indices had they not stepped up right away and held the line there. Currently, the stock market looks like a potential bull flag here. However, you didn't come off the deck today, and let's keep in mind that the weekly's down, the daily's down. The yellow line price is below that, the daily line. The white line's down, prices below that. So, those are significant time frames, believe me, to trade on, as you can imagine, the daily and the weekly. So, short side traders, the bears are still working the short side in the stock market. We saw that today. So, be mindful for all the stability in the currency markets. Stocks aren't as stable, and you'll never really be able to stabilize them overall as you might a currency market or a smaller market. So keep that in mind. The door's still open on the short side in stock indices. Hey, my name is Jay Norris. Thank you very much. We also want to remind you about our contest to win our scholarship. You can win a scholarship through Trading University. That's a chunk of money, a $3,499 value. Register there at trading-u.com/blog. And you want to register for that. And I tell you what, we'll be working pretty closely with those winners. We definitely have an interest in making sure that you're learning and studying and that we're doing our job in teaching. So we really look forward to that contest. We're going to give away 3 courses over the next 3 months, and that should coincide. The contest should coincide with our new book being out by McGraw-Hill. And we're going to announce the winners right here on the show. So, hey, thank you very much, everyone. Register for the scholarship, and we'll see you back here tomorrow.